guys, what's up? Alec back with another stock market investing video. Today we're going to be going over the banking stocks. We're going to look at why they're going down a little bit, what's going on. They just released earnings too, and you guys probably saw most of their earnings are good, but we're going to go over a few other things like the revenues and see if they maybe missed on revenues. And then we'll compare them against each other, see which ones I like the best and which ones I'm investing as well. And I'll give you my overall opinion if these banking stocks are a buy right now, if they're a hold, or if they're a sell. So you guys know I always give you buy, hold, and sell ratings on stocks. And then on top of that, I give you the price alerts on what I think is the best price to actually go ahead and consider buying the stock. So let's start by looking at all the banking stocks. Let's look at their earnings. So here we have BAC, Bank of America stock, and you can look right here and see their expected earnings by analysts and their actual earnings. So they about hit on earnings. They didn't really miss. They didn't really get above, 2 cents isn't a huge increase. So they pretty much had their earnings on pat. So next we have JPM. And if you look at JPM, which is Chase Bank, you see their expected was 2.23 and their actual was 2.92. So they did beat their earnings there. So they did do good. PNC, if you pull up PNC, you'll actually see their expected earnings were 2.1 and they came in at 3.3. So they beat earnings by almost $1. And also if you're paying attention as well, if you're looking at Q1, Q2, and Q3, these earnings, Q3 is typically the highest if you look at the banking stocks, if you're paying attention, or if you want to rewind and look at the other ones we just went over. Their earnings are the highest of 2020. All year, Q3 is the highest earnings that they're releasing. So they're getting back on track, it looks like. And you'll see that this was actually the highest earning Q3 in the last 5 quarters for PNC. This was the highest earnings they had, and they're still down 1.8% and they're down 5% in the week. So Goldman Sachs, ticker symbol GS, if you look at their earnings, they killed earnings. They had 9.68 and analysts expected 5.5. And if you look at the last 5 quarters, they're almost doubling their earnings. So Citigroup, ticker symbol C, if you look at their earnings, you'll actually see they beat earnings as well. The analysts are expecting 0.9, 90 cents, 92 cents, and they came in at $1.40. U.S. Bank, if you look at them as well, you'll see that they beat earnings, and it's the highest earnings of all year as well. Wells Fargo is down 6% today, and they're the only ones that didn't beat their earnings, and they only missed by 3 cents, which is really not a big deal because it's still some of the most that they made all year. Now, you'll actually see in Q1, they actually had a little bit more, and in Q2, they were down a lot. They were actually negative in Q2, but at least they're in the positive. They're in 42 cents earnings. And if you don't know what EPS is, you should look it up. It's basically earnings per share to actually see if a company is overvalued. So you might be asking yourself, why? What's going on? If all these companies are beating their earnings, why is their stock price going down? And they're going down like 5%, some of these ones, 3%, Bank of America. Just in the span of 2 days, they've gone down about 7 to 8%. We've actually been seeing that credit provisions are low. They're lower. Deposits are increasing, which is good. Loan growth is staying the same, which needs to go higher. It's staying the same though. Net interest and margins are low. Rates are low. So if you look at fees, they have been raising some of the fees because of mortgage applications have been increasing, and mortgages have been increasing, and credit cards have been increasing as well, which is good. So if you pull up for U.S. Bank Corp alone, average loans are down, as you can see. Commercials are down for the loans, and then residential mortgage is up 7%, which is really good to see for banks. And credit cards are up 3% as well. And also, this was a good article I want to share with you guys. Citigroup shares fall despite Q3 beats. So shares of Citigroup were getting hammered on Tuesday, even though the company reported quarterly earnings and net profits well above analyst expectations. For big banks, Q3 of fiscal 2020, total revenue came in at $17 billion, which was 7% below the same quarter in 2019. Net profit fell a far steeper rate, declining 35% to $3.2 billion, which is $1.40 per share. This performance was on the back of 16% growth in total deposits and 4% decline in loans. Analysts, however, have been expecting worse. On average, they're anticipating just over 17 billion on the top line and a per share net of only 90 cents, which is almost they doubled the earnings like we went over. And then you'll actually see while several of these results were encouraging, about the immediate future were not. CFO Mark Mason said we are expecting a somewhat more muted and slower recovery in both unemployment and GDP throughout 2022. That's clearly not what anxious bank investors want to hear these days. In Trading Tuesdays, Citi stock was down 5%, a steeper fall. So again, that's going to be hinting that, banking stocks are more for long-term growth and they're going to have a bounce back over the next 6 months, 12 months, even 24 months. They're going to be some great holds. So overall, what's my opinion on these banking stocks? I'm looking at these banking stocks right now, and a lot of them are near 52-week lows or even longer. So if you pull up a 3-month chart on Bank of America, and we see this support here. So I'm seeing the support at about 23, 26, 23, 22. So I think what's going to happen, we're going to bounce right off that support. And what do you see this doing overall? Going up. So even if we take it from one of the highs, it's still up about 13%, even at that little spike. If we go from one of the lows, it's up nearly 24%. It's been inching its way up, these stocks, these banking stocks. So they are slowly recovering. They're not the fastest growth. So banking stocks overall, what I think, it's not here to get you rich overnight. Banking stocks are not going to gain you 40% in a few months or 30% in 1 month or anything like that. But they're a great addition to have to your portfolio, especially if you're a diversified long-term investor. Because even if you're getting 15, 20% on these stocks, which is very realistic, in the next 12 months, a 15% gain in 12 months on these stocks, you're going to be a happy investor. And that's what it's all about, is as long as you're beating the market and your numbers are looking good long term, that's all you can ask for. Because a lot of these people who are day traders, yeah, they'll make a lot of money one day, but the next day they lose it all. It's just like gambling and going to Vegas. So the market favors long-term investors. In the long term, the market always is going to be going up. So it's easier to predict a long-term projection, and that's why the market rewards long-term investors more than short-term, because it does go down in the short term, and it will continue to go down in the short-term stocks. But long-term, you pull up any stock, any good stock, it's going to be looking up. So I think banking stocks are a buy right now, especially because they fell off a cliff from Rona, and they still haven't even recovered. So we're going to see some great growth. It's basically like if you had a time machine and you were able to hop in a time machine and go back to 2016, December 2016, and buy some shares of Bank of America, you're basically getting it at the same price. So why not go back in the time machine 4 years and buy some Bank of America stock? This is the time to do it. So that being said, my favorite stocks are going to be Bank of America is my number 1 pick. And I'm going to be putting Wells Fargo at my number 2 pick, which some of you might not agree with. But if you have a little bit more tolerance to risk, this is at a 52-week low, and we can see some massive growth. So you do risk a little bit more with Wells Fargo. But if it's basically like hopping in a time machine, like we said before, and going back to the year, look at that, going back 20 years. If you go back 20 years, Wells Fargo stock was more money than it is today. And why is that? Is because that once in 100 years events, the Rona hit here right here. It's not like that happens every day. That's a once in a 100-year event. So we have an opportunity to actually jump in a time machine, go back 20 years to 2000 flat, and actually buy Wells Fargo stock for the same price it is today. So what I'm not saying is go and put your life saving in Wells Fargo stock. I like Bank of America better, but this is a good one if you have a little bit of tolerance to risk, or you have a little spot on your portfolio for a little bit more risk. if you want to diversify, you should have about 5% of your profile, your stock profile, and a little bit of high risk, high reward stocks as well. So if you have a spot open for that, Wells Fargo is a great option. And then my third pick is going to be JPM. I think they're going to be a little bit more attractive around a price target of $95 though. So I would put a price alert for JPM on 95. And then my fourth and final pick is going to be Citigroup. And I would recommend putting even amounts in Citigroup, JPM, and Bank of America. Maybe you can put a little bit more in Bank of America. That's my personal opinion. And then put a little bit, put like half the amount that you decide to put in, all three of them, into Wells Fargo. So for example, if you have $1,000 to, let's just say hypothetically you have $1,000 to put in banking stock, which I'm not telling you to put $1,000 in there. I'm just saying hypothetically. So what I would do if I had that, I would put 300 in Bank of America, 300 in JPM, and then 300 in Citigroup. And that would be left over with $100 into Wells Fargo. So guys, I hope that video did help you out. Drop a thumbs up on the YouTube video if it did help you out. Leave a comment below on which banking stock you like the most. And what I'm going to be doing is a giveaway right now. We're going to be doing a $25 giveaway. So it's going to be the first 5 people who leave comments below and actually send the screenshot to my DMs on Instagram. On my YouTube channel, you have to comment on my YouTube channel and make sure you're subscribed. I'm going to give away $5 to every single person, to the first 5 people that leave a comment on the YouTube channel on this video. So guys, I hope you did like the video. Make sure you are subscribed. Leave a comment below for $5, the first 5 people. And until next time, remember guys, don't time the market, buy the market. Peace.